Well, that's right, and thanks for having me. We think that certainly some of the stockpiling is going on now, and what we think that some of the customers are doing is reacting to some of the supply disruptions that have gone on around the world. Obviously, that started with China in February. That's moved on to other places. A lot of semiconductors have their final testing in Southeast Asia, and that's been subject to some closures. There's another Apple supplier, Skyworks, that talked about a closure of one of their Mexico facilities. So particularly for those companies that have holiday demand, they want to make sure they get product built as soon as possible. And after that, then they're going to deal with how much of that demand may actually fall off because of the global economy. But of course, the customers don't know either. And, in the case of Apple, their retail stores are still closed. So what demand is going to look like on the other side of that when those stores actually open is difficult to assess.
Thought it was notable, Chris, that Taiwan Semi stuck with its pretty aggressive plans for capital spending investments in 2020. Why did they do that? Why did they say they were doing that?
Well, part of that is to support some of the ramps that are happening. And right now, Taiwan Semi is really the producer of record for the whole semiconductor industry on the leading edge. So they're ahead of everyone else right now. They're supporting the ramp of Apple on their new products this year, which is a new leading edge node at 5 nanometers. And that's going to expand coming into next year. One of the other large customers has actually become Huawei, who is using that for their 5G infrastructure. And because, those two things are at the very leading edge, that requires CapEx. And because those wheels are in motion, I don't think that they could have changed that.
Chris, where do you stand in terms of stock picks at this stage? Are they all going to be affected equally based on where demand actually lands, or are there some that are more protected than others?
We think there are some more protected than others. And so where we're positioned at the moment is those stocks that have product cycles that are very specific to those companies and likely to be unaffected by what happens in the global economy. So one of those, for example, is Nvidia, and that stock has held up very well. Nvidia has a new product cycle coming in artificial intelligence data center chips. That product is just coming out now. And frankly, it's one of the reasons also we believe that Taiwan Semi Q2 was good, because part of that was Nvidia's ramp. And that's followed by some gaming products in the back half of the year. So that's something where, even though, global GDP is going to be down, that product cycle still helps them. Another one is, for example, analog devices that's exposed to some of the 5G infrastructure. And we think that still continues. All of our checks thus far are that, 5G infrastructure, which is mainly happening in China right now, seem like it's continuing pretty well.